one.
Well, that rally on Friday is now a distant memory. If the world, the global economy, didn't have enough things to worry about, y'all know we had an unprecedented event over the weekend that's going to have some long term ramifications. Let's try and figure it out on Premarket Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Okay, traders and investors, let's get things started. We'll go by the numbers first, and then we'll try and break things down for you as best as we can. S&Ps are giving back some of that rally from Friday. We're down 27 handles at 43.14, pretty much where we opened on Sunday night. So still a lot of trepidation over the events over the weekend. The dollar's a little bit stronger, up 39 cents at 106.17. That's just been a strong move. Bonds flat here at 110 and 15/32. Crude, as expected here, up 342 at 86.21. We've been as high as 87.24 and as low as 84.67. Gold, a little flight to quality here. That's up 1630 at 1861.50. We'll see how long that lasts. Gold's been in a steep downtrend. Big silver, that's flat here, so not as much interest in silver at 21.72. And I thought Bitcoin might catch a bid off this, but it's not. It's down to $595 at 27,550. Let's bring in Triple D here, and
Yeah.
when you talk about the markets and you talk about the technicals, you talk about the fundamentals. I mean, things like this are unprecedented, and this is
Yeah.
I guess to go to a technical view of things, this is uncharted territory.
Yeah. I mean, and sometimes, making money has to be taken as a back step here, and looking, and obviously feeling for the people who lost their lives, the citizens, everything that happened over the weekend here is just terrible. Mitch will fill us on the details here just in a couple of minutes. But I mean, this is just not, I don't know what to say. It's a somber mood here today, Joel. I know you can feel it, obviously, personal to you, some of this stuff as well. Mitch, I mean, give us the details on kind of what has happened over the weekend here. But obviously, this happened, I believe, Friday night. And because I woke up Saturday morning and looking at my Twitter, and I was like, oh my gosh, what's happened here? And obviously, it's, another war.
In recent escalation in the Israeli-Palestinian conflict, Hamas fighters launched a deadly incursion on Israeli towns, resulting in hundreds of casualties. Israeli responded with airstrikes on Gaza, resulting in civilian casualties. The attack included rocket strikes on Israeli cities, mutants crossing into Israeli by land, sea, and air. Hamas cited various reasons for the attack, including Israel's occupation of West Bank and recent incidents that have happened in Jerusalem. Israel's government and intelligence agencies were caught by surprise, and the timing of the assault was noteworthy. The conflict has caused concern internationally and could affect efforts to normalize diplomatic relations between Saudi Arabia and Israel. This marked the deadliest conflict in decades and led to a full-blown war now. Israeli Prime Minister warned that Hamas would face unprecedented consequences for their actions. Now, of course, we're taking a look of how this new war will affect stocks. Let's take a look at what stocks are moving.
Obviously, this is the first thing you think is oil's going to rip on this. And it's obviously everything that we saw. And I know we always talk about technicals, and we had a technical breakdown in oil last week, Joel, which you can definitely talk to. You've got news, and we always say on the show, news trumps all. It trumps all technicals. It doesn't matter what the oil chart looks like. And the hardcore technicians will say, well, it was due for a bounce, and this is the bounce. Now, this is the news that is making oil bounce 4% here this morning, and it is a big bounce. Obviously, knee-jerk reaction. The bots, war, buy war stocks, buy oil, sell stocks. That's exactly what you're seeing.
Yeah, that's what
Gold to defense. So gold is getting a bid here. You're right. I'm somewhat surprised, but Bitcoin's a risk asset, so it's probably going to move more with the Nasdaq. I've said before than saying, oh, this is defensive. So let's just start with oil technicals here, Joel, because we do get the bounce. Obviously, start thinking about the 50% retracement of the move because it's such a wicked pop here overnight. So, I mean, we're not even that far from the 50% retracement move. Maybe we can figure out those levels and then, look from there.
Yeah, there's just from obviously I've spent a little too much time, reading about this stuff, but from all indications, this has not stopped the flow of oil, right, to the through the main shipping channels. Also, some of the bigger countries have said, we're not stopping production, right? Right. So the production issue, the supply and demand thing, as we know, as of right now, has not been disrupted yet. With 7 U.S. aircraft carriers heading to the area, that's a whole different story, and we can go into those implications in a second. I thought I'm gonna leave the monthly alone because that moved to 120. And I'm gonna focus on the bottom right chart. And even before this broke out and we had this big move, I was thinking we were due for a bounce, right? We went to $95 and then we went to 82. That's a 13-point move to the downside. That's a big move. I mean, that is a huge move in 2 sessions. So you go logically speaking, half of 13, let's call it 6.5, the 88.5, 89 level. To me, that's a logical place for a retracement bounce. So far, we've only gone to 87.24. So the market's going to digest this move. There's going to be a severe impact, on supply. I mean, one thing I think you also have to note is what some of the numbers indicated last week is that there wasn't as much overall demand for oil, and that's why you had the big decline. Now, this is a different story. So for me, I'll let it knee-jerk reaction is obviously up. We'll see if it can get back half of the move and stabilize. But the knee-jerk reaction here is predictable. What happens afterwards?
The bots are buying oil. I mean, as soon as this happens, the bots are buying oil, and the bots are buying war stocks. And we can go into those too. We can go into some individual oil stocks in a few minutes as well, but they're all up pretty much the same thing. If you just want to quickly talk, we can look through. ExxonMobil up 2.5%, Chevron up 2.6%, Conoco up 3%, Halliburton up 3.6%, Schlumberger up 3.8%, Fang up 3.34%, EOG up 2.89%. Refiners always move a little bit less sometimes, so they're not up quite as much. But you can see oil clearly popping on this news.
Of course, to add to the conversation, Saudi officials had reportedly told the White House on Friday that they were willing to raise output next year as a part of the proposed Israeli deal. An increase in Saudi output would help to relieve tightness after months of supply cuts from key producers in Saudi Arabia and Russia.
I'm not going to drill on technicals. No time for jokes here, folks.
Pun intended on the drill.
I think I would look at this like if you just try and have your blinders on this, and you were long ExxonMobil and you thought crude was going to 100, and you thought 120 was a low level. I mean, look at look where ExxonMobil's there. That's back to 110. That thing went to 120 to 100, and actually went a little bit below 100 a few days after. But man, if you want a nice round number there, 110 for ExxonMobil. As I said, I'm not going to go through each individual issue, but that's what I would look at, or look at some old daily highs in the area. You did get the spike over 110. Just look at that. I mean, that's about all else you could use as a guide besides keeping your eye on Benzinga Pro Newswire is see what other escalations take place. But
and I mean the escalations, the knee-jerk reaction is usually always the strongest reaction here, Joel, and something to consider. Let's just take it to the technicals and move away from obviously the whole personal situation here. Just moving directly to the technicals on this. I mean, there's a lot of people who bought oil, to your point you made a minute ago, thinking it's going to 100, and then it just fell off 13 points in basically a week and a half. There was a lot of people caught long oil. So, do they potentially actually use this as a selling opportunity to get out of some of those longs that they were beat up on? I think you got to just I don't think you can just jump in and say oil's going right back to all-time highs because this has happened. There's a lot of things to think about, and it's not like if we were trading at all-time highs when this happened, it'd be like, "Oh boy, you got
Yep.
Sky open." And we always talk about when stocks are trading at new all-time highs, it's hard to be short them because they can go anywhere. Well, I work the same with commodities, and we're not at all-time highs, but multi-year highs we were at, being up at $95, and now we start to come off quickly. Last week there was a lot of oil bulls who were very wrong last week. All of a sudden they're getting a check back. I think some people might actually use this bounce to cut their losses. So I'm not 100% convinced that we're just going to rip right back to 95 on oil. I don't know if I'm selling it on day one, but I think if I was sitting on a lot of oil losses, I'd think about maybe selling into the pop.
Right. And also people that were just like riding shorts, like, okay, we're breaking down under 80. It just shows how hard it is to like get so opinionated one way or another. This is the way it's going, and this is gonna happen because when you have, it's these kind of news events. I mean, like you said, you could throw the charts off the window. I mean, the other thing too, just looking back, I mean, just the dynamics of everything. I mean, the market had a nice rally on Friday. I
Yeah,
mean, things were looking okay, right?
yeah,
The reaction to the jobs number and stuff. So, besides it being the 50th anniversary of the, Yom Kippur War and everything that's going on in U.S. and global politics right now, I mean, the timing of this is, just I don't want to say impeccable, but it's just they timed it at a time when things are vulnerable, things vulnerable and volatile, I guess is the best way to put it.
Yeah, we'll see what happens with oil. I'm concerned that we get back to now higher 90s, right? If we get back above 95, what will that do for inflation? So that will definitely be on my radar there. Let's take it to the defense stocks.
yeah.
Lockheed Martin, RTX, NLC. What are you guys looking at here? Any opportunities still to play this?
Oh, I'm not going to chase defense stocks. The bots are chasing, there's people chasing, and obviously some of these defense stocks had been beaten up. So they were sitting near
Yeah.
the lows, so they needed a relief pop. They're getting a hell of a relief pop. Some of these stocks getting right back most of their losses back from the last month. I don't think yeah, when you go to war times, they automatically buy defense stocks. But some things, like these stocks, a lot of them were in serious downtrends here. I mean, you can look at LHX, L3 Harris, which has been beaten right up.
Yeah.
And again, a lot of debt. We've been talking about higher rates, a lot of debt. Those issues are not gone just because you get a war. Now, again, this is good. War is good for these stocks. So you can think the big three first, though. Lockheed Martin, LMT, which is trading up and was sitting near 52-week low going into this, is up 18 points here this morning. General Dynamics, which was held on a lot better than some of the other ones, it's up 11 points here this morning. And then NOC, Northrop Grumman, is up 11 points this morning. And then LHX, another one as well, which I know had in my long-term portfolio for a long time. It's up 4. You could go to Boeing. It's trading greener, but Boeing obviously, it's not just defense. It's obviously, airlines, which airlines are getting beat up on this news here. So Boeing's not going to be a pure play, but the pure plays are the big three: LMT, NOC, and General Dynamics. I think these pops are knee-jerk reactions, and I think there's a lot of people underwater in a lot of these stocks. I'm not sure you're going to get a lot of follow through here. So that's my thoughts as a technician. Obviously, if it escalates, Joel, as we get new headlines,
Yep.
that changes everything. So I mean, we are going to get new headlines. So if the escalations continue to go more than the market anticipates, then you can see some continued moves here. But I'm not completely convinced that this is just the end of the downtrends for all the war stocks, because obviously we're going another war.
Yeah, I mean, I don't know what way to make the best analogy for this. I guess I'll just use like when a new CEO comes in, like and a stock is up like 8-10%, like, they got rid of the bad guy, now the
Yes.
good guy's in, and everything's gonna be fine. Well, the way I'll draw the analogy here is like we don't know if the U.S. is going to war. We don't know if they're ordering new planes. We don't know if they're ordering
Yeah.
new bombers.
Yeah.
And if they do, who are those contracts going to go to? How long is it going to take to, well, first getting the funding through through the government, which got enough on their hands right now. So I mean, if you're playing these things and you were caught on the long side or you were bottom fishing, then unfortunately you got a gift. I mean, it's probably not the way you want to look at LMT up $19 on this
No.
session, but it is what it is. This is what the market's telling you. So, as I said, I'm just not going to drill down on every individual issue, but I would keep an eye on like the pre-market highs. And if you could find a daily high or a weekly high that coincides with that pre-market high, it makes it a better level. But
And remember the market that we have been in. This isn't a momentum market. We've been talking about this relentlessly for months. It's a contrarian market. So I'm not coming in buying Lockheed Martin up 19 points because of what's happened overseas here over in Israel. It's up 18, 19 points. It's a big pop. This is like a pop that if I was long the stock, I would likely sell into it just because it was in such a wicked downtrend. And I would also go as far as let's look at the overall market here and think about what transpired on Friday. But before, obviously these events, Friday during the day, we had a huge reversal, Joel. I mean,
yeah,
we were down significantly on the jobs data. We bounced right off the 420 on the S&P, which
oh,
we had
look at
talked about
that.
being potential support. We put in a quad bottom there. There is underneath demand now for stocks to a certain extent. Talking with my trading hat on, it will not surprise me if the S&P actually, and maybe we should go even further. Maybe we should look at the QQQ, because when people get scared, we think they automatically go to these defensive stocks. But when they think about stuff like this, they sometimes go to the Magnificent Seven once again. I'm wondering if the Magnificent Seven doesn't actually get bought on this dip. Talking about Apple, which is down more than the market right now, 0.7%. Talking about Microsoft, which we'll get to Microsoft news here in a second. Microsoft is a stock that's talking about news that came out Friday before these events. They're talking about a potential AI chip. So Microsoft had its own news, which was up substantially Friday night before this, and we'll get to that news in a bit. But I'm just going to go through these stocks, Magnificent Seven. Tesla's down significantly, had a huge reversal on Friday as well, was way down, and then obviously turned around and started to try to go green. Meta, obviously same thing in the Magnificent Seven, huge rally on Friday. There are people who are short these stocks that are getting crushed, and we've been giving the argument that the Magnificent Seven has been doing better in this environment
Held
because
up.
majority
Yeah.
of these companies don't have a lot of debt. Majority of these companies are basically debt free. Like, you could say Apple has it's billions. What do you mean? Yeah, but with their market cap, they could do an offering tomorrow and get rid of all their debt just like that in a snap of a finger. So Tesla is unbelievably almost debt free. So I mean, you think about the companies that are debt free, and just take these events. Let's take the events that happened over the weekend, obviously in the Middle East. Take these events and not look at them for a second. When you look at where we were in the overall market, they were basically on Friday buying mega cap tech. They weren't buying debt laden stuff. A lot of stuff didn't participate on Friday. Some stuff did, but there was a lot of stocks that really didn't participate that much on Friday. I mean, banks are a mess. Banks have been a mess. They didn't participate much on Friday. IWM bounced a bit, but it didn't participate much. And it's right back down to the lows. What was bouncing on Friday was tech stocks and especially mega cap tech. Does that bounce, because you're getting a check back here today on this news? Does this dip in mega cap tech get bought? I'll throw it to you guys.
I just gonna make one comment on Apple, and then I'll throw it to you, Mitch. When
Mhm.
before I was out the latter part of last week, I was looking at I always like to look at things on a relative basis, and yeah, the S&Ps were breaking down, but your top component that just it went under 170, but that wasn't last week. That was 2 weeks ago. That was holding up the relative, and when I look at that, I'm like, and there was actually one day last week before I left on Wednesday, so on Monday and Tuesday, where Dennis, and I remember talking about this with you. the market was down, like going into the last 20, 30 minutes. And I looked, Apple was up, Microsoft was up, Google was up, Amazon was up,
Yes.
Nvidia was up, and Tesla was up, and Meta was up.
Yep.
And I'm like, and the S&Ps are down? I was like, okay, I know absolutely nothing about these markets. I know nothing about indexing. This makes absolutely no mathematical sense. And then what happens on Friday?
And it was just the other stuff was so beat up. And the other stuff did try to bounce on Friday. But again, it's mega cap. It's the Magnificent Seven that's leading this market. And it's hard to fight that. And people asking me about my short on Apple. I talked about why. I talked with you last week when I was short Apple, and I said I'm nervous on this Apple short, and I actually may cover it because I don't like the debt. I don't like that, if you're being short the stock, and you can clearly see what was getting hit hard were companies with debt, with a lot of debt, because interest rates. And I'm looking at this and thinking Apple basically has no debt, very little debt relative to market cap. And it's kind of stock that people may flock to and hide. And that's what's transpired. So it's coming back up. So I am not short Apple anymore. I covered it, I believe, Wednesday when we were talking about it on the show. I made a little bit of money on the short, but it really didn't go down that far. I'd been short like 174, 175, and I got short out at 172, I think. So it just wasn't the time. You could see clearly the separation. As a trader, do I think Apple is overvalued? Absolutely. Do I think Apple, should be trading 28 times in an environment where I think, we are going to go into recession? No. But the short term here, we can see what's happening. So I'm going to talk bullish on Apple here today, just in the short term trader hat, not putting in my long term portfolio because I don't think it makes any sense at 28 times. But as a trade right now, you can see clearly, Joel, to your point, that's what they were buying 2-3 days ago. And you've got to understand when you see a stock downgraded and then it closed green, KeyBank downgraded the stock and closed green on that day, it's telling you that there is just underneath demand here. I think the Magnificent Seven continues to catch a bid here. I think the dip in the Magnificent Seven today is a potential buying opportunity with my trading hat on. It is scary to go buy stocks though. When you're talking another war, we're talking all this new information. A lot of things can happen. So, if I go and buy some of the Magnificent Seven today, say they're down 1%, some of these stocks, and they all of a sudden pull the rug out from under them at 940, 950. Well, I'm going to cut my losses because I'm going to be wrong. It's a wrong call. As a trader, your job is to change your mind when you're wrong. How do you know you're wrong? You start losing money. That's what it is. But, let's take it to Microsoft news here, Mitch, because Microsoft's in the Magnificent Seven. Microsoft had a very big headline Friday night, and this stock was getting bought hard, Joel. Friday night, it was up over $2.50 because they'd come out with news, or over $2. They'd come out with news that they were coming out with or the information. No, Mitch, give the news, or the rumor. It's a rumor.
Yeah, it's a rumor, and it comes from the source of the information. It seems like we're gonna have to get this magazine or keep an eye out because we've gotten multiple reports from the information. Just want to state that Microsoft to debut an AI chip next month that could cut into NVIDIA's GPU costs. Of course, Microsoft has even been using NVIDIA's chips right now for their AI, but if they could actually debut their own AI chips, cut away from NVIDIA, will others do the same also? And what will that do for NVIDIA's earnings?
Let's be honest here. Let's take valuation aside on Microsoft for a second here. They are doing everything right now, Joel. I mean, the ChatGPT trying to attack Google. Now we're going to come out with this. We're going to try to get on NVIDIA and attack there too. They're trying stuff, man. You got to give Microsoft some props here because they are trying. The valuation is nosebleed, yes. But I'll tell you, right now, for today as a day trade, I think, this is just my opinion, I know nothing, I have no information, I don't have a crystal ball, but I think Microsoft goes green here today. I think Microsoft is the one that if I'm buying any of the Magnificent Seven today, it would be Microsoft because this is just new information that nobody's going to talk about today, but it's sneaky because, obviously, what's the events that have transpired in the Middle East are trumping everything. But this stock was up $2 on this news Friday night. And NVIDIA was down at one point in time, Joel, $6 on this news on Friday night. NVIDIA is down 9 now, down more, getting hit harder because there is some of this news in here. They don't want competition from Microsoft. And Microsoft's coming in and trying to give competition to everyone. So ChatGPT was a direct attack on Google. This is pretty much a direct attack on NVIDIA. So if I'm a Microsoft shareholder, I'm liking this news. And I'm not a Microsoft shareholder at this time, but part of me as a trader thinks maybe I want to be for the next little bit. again, if the market just turns around and the market could get spooked here, like we don't know what's going to happen. Dip's kind of getting bought a little bit here, but once the market opens here, we got Columbus Day. I mean, there's a lot of
Yeah, there
traders
you
not
go.
even on
I
the desk.
wanted to
It's a
mention that.
holiday in
Yep.
Canada, Thanksgiving in Canada here. So, I've got family over and stuff, and that's why, I'm not going to trade a lot of today either. But I'm
Bonds are
doing the show
closed
with you
too,
guys.
right?
Pardon me, Mitch?
The bond market's closed,
The
right?
bond
And
market is
how would
closed.
that
There's a
affect the
lot of
market
like,
today?
this is like closed. Like, there's a lot of things closed here today. So, I mean, like the Canadian markets are all closed too. So you got to think like the volumes could be a little bit lighter here, so this could move price even more. We don't have the bonds to look at.
Mhm.
So if you're taking any trade, I'd just say cautious. You've got to be cautious. And if you're wrong, you're wrong. My knee-jerk thoughts are actually to take profits in oil and to buy mega cap tech on this dip. That's what my knee-jerk reaction, like thinking here is, but that's the natural contrarian in me too. And I may be wrong, but that's the way I would maybe try to trade it if I was trading it today.
Just to bring something different to the conversation, have you guys ever traded like the XLG?
It's thinner, isn't it, Mitch?
Yeah,
I
this is
think
the
it's pretty
top
thin.
50 in the
Yeah, it's
S&P
pretty thin
500.
though.
Let's
Oh,
see.
it's actually, no, you're right. It has some volume.
I'm looking for stuff that, could be not magnificent 7, but at least maybe give us a little bit better exposure to the top in the S&P 500. This is the top 50. What do you guys think about something like this?
I don't
I've
think
never
you want to.
traded this ETF.
Yeah.
Never
And
traded it?
maybe it's
That's
because I
interesting,
stick with the really big ones. So, I've heard of it. I've just never traded it. It does have some volume. It doesn't have the volume of the S&P. It's not even close. Like, what was the volume of this on Friday, Joel?
Yeah, 424. I mean,
See, I
420.
like to
Yeah,
get in and out,
yeah,
like
yeah,
very,
yeah.
and maybe it does have a market. Maybe high frequency traders are giving it a market. But the reason I don't trade some of these, and you've got to really watch on the ETFs, like, oh, that's a cool ETF. We're going to go trade that. I mean, obviously, we have Matt Tuttle on here a lot of times here, but some of his ETFs are pretty thin. So, I mean, you have to be careful. I think this one's thicker than that. I'm looking at, it's got some trades. 400,000 isn't nothing. But
Yeah,
I like to get in and out with a penny or two spread. That's why I stick with the S&P. When I'm trading ETFs, the majority of my trades, I would say, the mass majority of my trades are probably, really within 10 ETFs. And the biggest one, obviously, SPY, Qs, IWM. Those are the three big ones. But then, I trade XLF, which I have a position on even today. And I'll trade, XLV and, XLP if I want to trade staples, and XLU if I want to trade utilities. Why? Because they thin. I don't go to those smaller ones because there's like a dozen, staples ETFs, but some of them are really thin and just can't get in and out of. So I don't want to be paying like a big spread to get in and out of it. So that's why I typically stick with the most widely traded ETFs. But I mean, if you're a long-term investor and you want a little different exposure, a lot of these vehicles are
there you
designed with the
go.
long-term investor in mind.
Right. And for for you, Dennis, I mean, 400,000 on Friday. I mean, I remember when I used to, be, very actively trading like several stocks. If a stock trades 400,000 or 500,000, you're not taking down 5,000 shares, because you're going to
Too
be the
big.
market. You're going to affect the market. You're going to, even, if you get long it and you panic and you want to get out, you're going to move it, vice versa. So like for this, if you're trying to day trade it, I bet you, like, even if you took down like 800 shares, you would have to, babysit it a little bit to, to try and get out of it. But if you're a long-term investor, then it's a little different story. I just want to do a general market comment here. And, I think all things considered, to see the S&P's down 25 handles, I mean, I almost feel like it's up on this session,
Yeah, that's a good point too.
yeah, with everything that, with
Yeah.
everything that's transpired. I mean, if this was the big kahuna, this is the start of WW3, and, this was it, you know, get in your shelter, we'd be limit down. There'd be no doubt. We'd be limit down. So,
There's
uh,
buyers out here. There are
yeah.
buyers buying this dip. You can clearly see it, early trade here. And how low have we been, Joel? Just to give us the overnight action, just to recap it, to get a feel for what has happened here overnight. How far are we
The
off the lows?
we're 17 handles off the low.
Yeah.
The S&Ps, I didn't, with the way we whooshed up on Friday, it was hard for me to find a good daily number to lean on. So 42.99.50, psychological 4,300 level. If that holds up today, then that I think that and I don't know where we're going to close. I don't know if we're going to take it out and close above it. But if somehow that pre-market low is defended and let's say we settle right here, right on Columbus Day or something, I think that'd be like a major victory for the market. But we're an hour away from the open, and a lot of things can happen. Also, you guys did mention it is Columbus Day. There's a little bit less liquidity, but I think right now the S&P's down. Like my knee-jerk reaction, like when I saw this Saturday morning, the only thing I think about, even though I was away, was like, man, how the SPU's going to open on Sunday? You know they're going to open down. You know oil's going to open up.
Yes.
What's the next move? What's the counter move? How the more information too. Like I was very upset about it. I'm like, I'm gonna wait a day and I'm gonna get more information. Well, it turned out more information.
And that's not a bad
everything.
idea. Like, even if you're like, I don't know how to digest this, you can sit back and, like, we're trying to make calls. It's what we do. You guys come to get our market opinions. My market opinion, just short term, is like, I think, that I'm not saying I'm necessarily going short oil, not into this news, but would I ring the register on some of these pops in the defense stocks? Yeah, I think I would actually. Would I chase these defense stocks? Absolutely not. I would not do that here. Would I buy the dip in mega cap tech here as a trader? Kind of. I mean, that's what the natural contrarian in me, and I've kind of see it a little bit here already, some of that happening. So, maybe that changes after 9:30 when people get in. It is a holiday, but I think just, to come in and say, yeah, I'm going to come up here and buy Lockheed Martin up 20 because it's going up 50 on this. I don't think it's going up 50 on this.
All right, let's move towards looks like buyout here in Bristol Myers. Bristol Myers to acquire Mirati Therapeutics for $58 per share in cash. Mirati stockholders will also receive a non-tradable contingent value right, a CVR, for each Mirati share held, potentially worth $12 per share in cash, representing an additional $1 billion in value.
What is the symbol on Mirati? Does it have a symbol?
I'm 0 for 3.
On, man.
I did MITX. I did MRTI. MTX.
Keep up. No, you got 3 of the letters.
Okay, I give up. What is
MRTX, man? MRTX.
I thought I tried that.
So is this a take under?
They're acquiring Mirati for $58 per share. So
it's a take under.
Dun dun dun. I'm
just looking, like, the stock's trading down $3 on this. It obviously popped up so we were rumored here on Friday.
Thursday, maybe.
Is this Friday it had the big pop-up, Joel? I'm trying to look at the chart.
I think that's Thursday.
Yeah.
Thursday.
Yeah.
So I had a rumor coming out here on Thursday that Bristol Myers was talking about, or not maybe Bristol Myers, but there was rumors on this thing, obviously, because the stock was popping up. Now we get the official takeout, and the official takeout is less than obviously what the market thought it was going to be.
Oh.
It was Sanofi, who was rumored on Thursday to be buying it. Yeah. So it does get bought, but Bristol Myers comes in out from under Sanofi's feet and scoops it up. So MRTX, probably disappointed. Shareholders probably very disappointed with the premium here, because sometimes you get these smaller companies, they think, oh, I'm going to get the payday here. Well, if you're buying it Thursday on the rumor, you didn't not only not get a payday, you're actually taking a loss here this morning because the price comes in under where market thought it was going to be. Bristol Myers acquire here, they seem to just hit them no matter what. It's getting hit here, so it's down 1.3%. Bristol Myers is just a stock that's just been killed. I mean, you don't want to talk about stock charts that are ugly. Again, this is a little bit to do with the interest rate trade. Drug stocks typically have more debt, but it's the bigger thing is the TINA being dead trade, is that the alternative is just 5.5% treasuries, which sounds a lot safer than a drug stock. So I think that's what's killing them the most.
I also see some headlines here that that same day there was a headline that the FDA advisory committee was meeting to discuss a rival drug by Amgen. Maybe that has to do with why they went after this company. What's going on with the situation with Amgen and the FDA? I have to look a little bit deeper into this. I don't know if you guys know a little bit into that, but so it looks like Amgen, FDA is looking into a drug, maybe potentially this one could compete with that one, and that's why Bristol Myers went with it.
Okay.
All right, let's go to everybody's favorite Monday time. I know you guys have been asking, where the heck has it been? We need some market structure Mondays. All right, Tim Quast is back with us. How we doing, Tim? It's good to get into it. Talk a little market structure edge. How we doing?
Good to see you. Thanks for the couple weeks off. I kind of needed it.
We all need it sometimes,
I
We
man.
need some time off
Yeah.
after this
Oh man.
this last week for sure.
Yeah, it's
Right?
been
Right?
definitely a tough day with the situation that's been going on. Of course, we can get into the conversation how that affects the markets. What will you be looking this week, Tim?
Well, Mitch, it's the markets don't seem to have a lot of a lot of propensity to hew to what happens geopolitically. We're talking about what's happening with Israel and Hamas and maybe Hezbollah. We'll see. The one thing that stood out to us ahead of this event was very high short volume market wide. Look, the market was at a statistical bottom. We talked about it last week to edge users that we felt very confident that the market would offer some good trading opportunities, particularly in tech. I don't think that those are gone. But to me, the telling feature will be short volume, the supply side of the market, not the demand side of the market. We'll see.
Now, of course, interest rates have risen and tech stocks were rising on Friday. But what's going on? It just seems like there's a lot of conflicting noise in the market right now, Tim.
Yeah, well, the orthodoxy is that tech does poorly when interest rates rise, and I guess the thinking there, I don't buy into that notion because I don't think the market has worked that way for quite some time. But I think that the notion is that if interest rates are high, it diminishes the interest that money may have in chasing risk. I mean, if you can park your money in cash for 5%, why would you risk losing 10%? If you look
I've been given that argument for a while here now. It's why
Right.
I'm half cash in my long-term portfolio, because I get paid
Right.
to be in cash.
It absolutely. The counterpoint to that is that you always have to keep this in mind, traders. You got to know how the market works and what the money is doing, and this is how the market works and what the money is doing. There will always be, and until there isn't, I guess, a certain amount of money that is going to be committed to equities in models. And this is how the market works today. Most of the big institutional money, and I'm talking about BlackRock, Vanguard, Fidelity, State Street, UBS, JP Morgan, Morgan Stanley, I could rattle off additional names. They're principally following models. You probably have money with those folks. I have managed accounts. We tend to follow an allocation scheme. How much do we want committed to equities versus other forms of investment, fixed income, alternatives, real estate, all those sorts of things. And there is a certain chunk of the money that will continue to go through retirement vehicles into equities. And where does it go? Well, it's going to disproportionately go to the biggest stocks because they are stable, they have less volatility, and they have a lot of liquidity. And that will disproportionately benefit tech, large tech. I mean, Tesla and Amazon are 43% of the consumer discretionary index. It's
What
shocking.
index?
Yeah, I know, it's crazy.
That's not an index, man.
Right? Exactly.
Yeah.
So they're going to benefit. And that's why we say, well, just look at the supply demand balance. And when those things are improving, that's where you want to be. When they deteriorate, you should put your money in cash. And right now, we've had a nice few days. I had a very good trading week last week, trading things like AMD and NVIDIA and other big tech. But I think it could be a short cycle, just looking at the supply side.
Yeah, and if we look into the markets, right, we've had some rallies on Friday, and the S&P 500 still down significantly here. And if you look into the sectors, there's some sectors that are screaming goodbye, as we saw the utilities down big, real estate down big, staples down big. Where's the safety trade? Is there any safety trade? And what's really going on underneath the hood here, Tim?
Well, so if you look at real estate and utilities, they're very small parts of the market. I think that that's part of the problem. If if BlackRock is allocating money to the market, what proportion of it is going to go to real estate and utilities? Well, not much, particularly when there is a disproportionate amount going to fixed income because you can produce a return from your capital. I mean, why would you buy illiquid real estate and utility stocks if you could buy liquid Tesla or Amazon or Nvidia? And I think that that's a problem. Consumer staples, it's difficult. I can look at the supply demand balance here. I'll show you, in fact, and you can see what the problem is. Bear with me here 1 second.
Let's do it. Let's do it. While I give the chat here, I'll give you guys, of course, you guys know we're using Market Structure Edge. You guys check it out for yourself. I'm throwing up the link here. Get your 2-week trial, man. Get it now.
It's actually a month. You can use it a month. No risk. You don't have to, just
I've been getting, I know they're using it out there, Tim. Other shows, I've been hearing messages. Hey, market structure is saying this. I'm like, all right, well, thanks for the insight, right? We got to know the good stuff, man. Let's take a look underneath the hood.
Hey, it works. And it's certainly not because I know something. It's that there is a cadence and calendar to the market, and there are rules that govern how money gets into and out of the market, and you can see it. So going to, staples and discretionary are right next to each other. And this is how I think about these things. There's demand, the top graph, and there's supply. And when they're diverging, as happened right at the end of August into September, this was a good time to trade consumer discretionary. And you could produce some nice returns. The moment that deteriorates and demand wanes and supply rises, not a good time. Maybe it's like I saw in the chat, that's a good time to sell premium. If you can see that demand is just not there and there's too much supply, well, it's a good time to sell volatility to people who don't know those things. And if I look at it right now, the demand side of discretionary is okay. It's at 5. That's the bare minimum. That's just matching supply and demand. If supply is above 50% and rising, it's going to be very difficult for those stocks to rise. And so probably you should sell some premium on that group. If you look at staples, it's even worse. Weak demand, supply is not quite as high, but it's rising too. Weak demand, high supply, not good. Until those conditions change, either short or sell premium or find something else. And, you could look at big tech. This is what we saw a week ago. Big tech had falling, here, I'll zoom in on that, had falling supply. See this? This was the bad time. Right at September options expirations, you don't want to be in tech. But at the transition from September to October, demand was, or supply was very low and demand bottomed and rose. And that is oftentimes where you can get a return in tech. So AMD is a great example of this. One that you don't tend to put with big tech, but it behaves very much like big tech, and it's more volatile, which means instead of getting 2%, you can make 3 or 4% at a time. I traded it over and over. It went up to 104, then went back to 100. I bought it, went back up to. I just did that over and over. So it's a way to play those trades, and so you can see this is still pretty good. The thing to watch is if the supply side begins to outpace the demand side, clearly prices are going to stop rising. And if you're long, then you don't want to be exposed to that. And once again, maybe then that's the time to sell premium. But that's what we look at. And if I look at, there's the only thing. Is there momentum in the market? Not really. There are 4 stocks in momentum. One of those is Nvidia. There are 11 in low volatility. Now, again, could you?
What are the other 3 in momentum? We always like to see your momentum.
You got it. Yeah. So
we had 0 in there a couple of weeks ago, so at least we got a couple.
We went for almost 2 weeks with nothing in it. So there you have it. Moderna is in it, believe it or not.
Wow.
Nvidia, SMCI, SE. These are challenging stocks to trade because they're one's an ADR, American Depository Receipt, I believe. SE is. Yeah. Yes. And those things are challenging because they're heavily arbitraged and they don't necessarily do what you expect. So be careful. I mean, if I'm picking out of this, I keep returning to Nvidia. I mean, you could make $17 per share on Friday in NVIDIA if you just
Yeah,
bought
it's
it fairly early,
ridiculous.
right? It's just crazy.
It's that, and we have a
Yeah,
headline
crazy.
here in NVIDIA, and we're getting a dip here again because it's talking about Microsoft coming out with an AI chip they were kind of talking about on Friday. So you come back with the NVIDIA here, dipping here. It seems like just when NVIDIA dips, there's just so much underneath demand in this stock that you just can't break it. I don't know if it's money managers that just don't know which AI plays, but they know NVIDIA's one, and they just keep scooping it up on the dip. I mean, SMCI, which is another one, which was in your filter, which I was long for a bit too, and I just sold recently because it's rallied up quite a bit here in the last week or two. I mean, the dips keep getting bought in this stock too. So the AI story is still out there. Even though the market has gone ice cold, the AI story is still out there. You can see it in those stocks.
Yeah.
Absolutely. And if you're looking at it from a market structure standpoint, this is what you look for. You look for rising demand, the green part of the graph, and it's hit 10 now, and falling supply. Almost always, particularly if the stock pulls back some, you're going to have an opportunity to make a reasonable part of the volatility. And now NVIDIA has almost 5.5% movement every day. That's just between the highest and lowest prices. So if it's down 3 or 4% at the open, the probability that in the next day or two you can produce a nice return is mathematically very, very high. When supply starts to rise, that's going to deteriorate. And that's how you manage risk. You're just stacking the probabilities in your favor that you can produce a return. And does it have anything to do with fundamentals? Well, that's an input. But it's really these short-term imbalances in supply and demand that give you the opportunity to produce returns.
All right, Tim, let's wrap up with just the overall market outlook. We haven't taken a look at the overall market. I'm sure it's going to be similar to that big tech, but let's take a look here. Let's see how supply is moving up, and can we really kind of sustain a rally back from these 420 area, or will we be going lower? What is it showing us on the data?
Well, okay, so if you're new to Edge, this is the gray part of the graph, the one that's more volatile, that's price, and it's SPY. It's a proxy for the S&P 500. The smoother green line, that's tallying up demand, 10-point algorithm that meters buying and selling by investors. There are 4 big behaviors plus price that make up that algorithm. And then down below is short volume, the data set associated with the modified uptick rule. It's a great way to understand supply in the market. When demand drops below that green line, literally 100% of the time in the data set, all the way back to 2010, the market has risen. But it can be very short term. I mean, could things change very rapidly? Yes, and here's why. If the supply side were falling, I would say this is a very durable rebound. But the fact that supply is 51%, the market is more short than long. And so it's like climbing a hill. If you're in a car and you press the throttle, you've got thrust, which is what demand is, but the hill is fighting against you. And that's kind of where we are. I think this is a reflection of, if people get cautious, if they turn cautious about the situation in the Middle East and the potential for it to expand, I mean, the world feels very tenuous right now, and it's a terrible thing that has happened there. Somebody's going to have Israel's going to have the will to win this thing, to restore order. But this is bad news. If this continues to rise, we're going to see a double dip here. And I don't know what's going to happen. I just watch the data. And then you have to shorten your time frames as a trader when you see these things developing, so that you're not caught out and all of a sudden, your trades turn negative.
What I like about this is also, Tim, is sometimes as traders, we always get like kind of our subjective view, right? And one of the best things I think is important is also taking a view of your subjectiveness of the market, but also then looking at quantifiable data to seeing if those two views are matching. Because that's what I like to do, is try to match the variables, right? The technicals, the story, the fundamentals, but even better, kind of short supply, looking into demand. Things like this, I think, really help when we can put those things together.
Absolutely. And a great segue to Israel is Danny Kahneman and Amos Tversky. Danny Kahneman won the Nobel Prize in economic theory for their studies. And, they're Israeli PhDs who studied confirmation bias, our natural human inclination to believe what we think. right? We do that. That's what we do as
Yeah.
human beings, and you have to be very aware that we all are subject to it, and
Yeah, for
it's
sure.
challenging. We commit and we believe something's going to come true, but you got to step back from that and do, as to the best of our ability within the constraints of human nature, use math, because math brings objectivity to the equation, and that's all. The only advice I could give you is you try to rely on math, because math won't lie to you.
That's what we'll go with. If you guys want to learn a little bit more of Tim Quast and, of course, Market Structure Edge, I threw up there his link for Market Structure Edge. Get that free trial and give my man a follow on Twitter. Always good to have you.
And come join us on Thursday, 2:30
There
p.m.
you
Eastern
go. You
time.
got
We'll
to.
we'll,
Nice.
we'll talk live about using the data effectively.
Hey, well,
Always
you get
fun.
Market Structure Mondays here, but if you want Market Structure Thursday, you might want to go over to my man Tim. Have a good one, Tim. Always good to have you. It's good to have you back, my friend.
Great to be with you guys. Thank you very much. Have a great
Thanks,
week.
Tim.
All right, let's get back to the markets. How we looking here, Joel?
Just quiet here, just chopping, if we didn't have the events over the weekend, you say, hey, this is Columbus Day, you're gonna have a little bit of a tighter, range bound market. The bonds, even with the bond market closed, they're showing a little bit of strength here, but
Well, you can look
just
at the TLT, and this is, again, we talk about, this is a flight to like safety here to a certain extent. And the TLT has not been a flight to safety for a long time because of rates. But now you get war times, like, I want to be more in cash here. And I'm going to go in the TLT where I can sit here, pick up some money. And, obviously it's depressed prices, but, with the bond market being closed, you don't get a pure feel for, what's happening here. But fairly active market here. TLT is up today.
Let's take a look at Israeli stocks that are down also off of this. I got a couple of these names, some bigger, some smaller. First one at the top, CHKP. We can take a look at that. And a lot of these stocks are down pre-market.
I don't know
Will
any
this
of these. Well, I know
continue
it's a
to kind
stock,
of
but I didn't know
affect
it's
these
Israeli.
stocks? I'm just bringing up something that I will be looking at. Of course, I'm not sure that they will continue going down here. They are showing some effects in the pre-market here. We're going to run through a couple names. So there's Teva, also TEVA.
is the
Teva.
Israeli market open? Or this is just the, I didn't look
These
that up.
are some that have exposure to the U.S.
No, right, I know, and they're
And
listed
then
on the U.S. exchange.
Teva's an Israeli company?
Yeah, Teva
I did
Pharmaceuticals
not know
says,
that.
yep, yep.
yeah, I'm looking this up from companies that have exposure
Okay.
with that, and so some of these could also have exposure elsewhere too, but they do have it definitely exposure here. Also, you got Monday, MNDY.
Really? I did not know this.
This is what I'm just
Yeah,
try to
no,
add
this is
some
good
added value,
information,
right?
Mitch. This
Try
is
to
good
add some
information.
added value.
Yeah.
F and Fiverr, FVRR. And there's a long list here that you guys can look at. I'm going to
And
throw up
these
the link
stocks are
here
getting
where I
hit
got
harder
it.
for sure. So where are you getting this list from?
I'm throwing it up right now in the chat. I always like to give you guys the outlook
Where
there.
are you
This is
grabbing this
from
information from?
stockmarketmba.com. I just threw it up in the chat there. If you guys want to
Okay.
take a look at it, I'll
Yeah.
also throw it up in our chat there, Dennis, if you just want to click on it.
Yeah. No, it's
That should
good
help
information.
you.
Thanks, Mitch.
So these are, of course, Israeli companies that have exposure in the U.S. exchanges. And so definitely take a look at that. I'm not sure that these will continue going down, but it could be the non-obvious.
It's important to
type of trade
know.
today.
Important to know.
I would say, looking at all these stocks, I mean, the best in breed here is CHKP. I mean, you talk about a tech stock here, pure play cybersecurity vendor.
CYBR too
Yeah,
is on there.
yep.
I'm just
This
looking at the
is
list now.
this is based in Tel Aviv, Israel. I mean, this thing, you talk about best in breed here. I mean, this thing is down. So if you want to be with the trend trader and go with what the trend here, and you're buying dip. I mean, this stock has by far been the best performer. Teva, it just never wasn't that peanut allergy thing they had, or it was that Mylan Labs. I remember they had some problems. Teva's it's just dead money. It's been dead money for quite some time. Had a nice bounce off 9. So just have to see how these ones trade. But looks like CHKP, there's going to be some questions asked at regarding the Israeli, the intelligence on this one. This was unfortunately quite a surprise.
Disney, we got to talk about it. The chat's been like, what's going on, Dennis? They want to know, is it an investment now? As Nelson Peltz plans on pushing for board seats at Disney. Of course, they have a stake more than 2.5 billion. I feel like we've heard this headline before. Has
Yeah,
this
and
been out
Peltz was in here
before?
for a while, and then he cut his losses basically on a pop.
Is that what happened?
Same, yeah, kind of. I mean, you were at multi-year lows in Disney. You were at major support. We can't argue with that support. Same way the S&P bounced to 420, Joel. The level was just too big. Disney level of 79 is just absolutely enormous. It's the COVID lows. Obviously, I'm concerned, and and maybe you can talk to Disney a little bit more here, Joel. I'm obviously concerned that the park attendance maybe starting, they're cutting prices. I'm concerned about that. But at the same time, there's a lot of bad news priced into Disney. The stock is, it's down 70% from its all-time high. It's approaching 8, 9, 10-year lows here. And it's starting to go up on bad news. So, I mean, when you start seeing your stock not going down anymore, you start thinking maybe the low isn't in Disney. It's been a good couple of days for DIS.
It's been a great couple days here, and that's why institutional accumulation. I mean, this 80 has just been a level of levels. Okay, if you're a big institution and you're loading up at 80 and it goes to 78, 73, or 70, 80, you're buying more. I mean, that's just, they want to get a stake, their average price. That's a big pop there over the last couple days. Of course, market dynamics happen, but it's like it's got us at like here it had a nice rally. I would like to see if it could get up to the $86 level. That's what it did the last time it bounced off 80. If I was a Disney shareholder and you started to get 84 and a half, 85, and you start struggling, then boom, you could look, for the turn back to 80. But that 86 just is that it? Yep, that's 86, man. That's a 5-star for you. 86.19, 86, just under 86. Those were two highs in September. Another high in August, right there, just under 86, 85.95. So trade the range.com, 80 to 86. Let's see if Disney has the juice to get up there.
We'll see if they ever find somebody for Iger, but let's go to Dennis for a final outlook of the market. What are you seeing today, Dennis? What will you be watching?
Again, just looking for maybe the mega cap 7 to catch an early bid. There's people who are underwater in these shorts, and they'll be using this opportunity to maybe scratch out a trade or cover out, some smaller losses here if they were short here. I think I go with what was working on Friday to a certain extent, and that was, basically, the mega cap 7. I think if I was long defense stocks because they've been so beat up, and remember, interest rates are still a major concern here. I think I don't think you're going to see them give it back or anything like that. I don't think that's the case, but it's a big pop. I'm not chasing them here.
All right, Joel, let's get your final outlook here on the ES and what levels should we be watching?
Just a little 9 o'clock pop here. Right now it just feels like
Yes, chart me. Yes, chart me.
Oh,
They want to see the charts. They want to see the charts, Joel.
I said I stopped sharing.
The good stuff. The good stuff.
Okay, let me go back here. I'm a little rusty after
Get the good stuff.
Trust me, I get people hitting me up. I didn't get the Joel Elconin levels. What happened, Mitch?
Okay, let's go get rid of the Disney. Boy, oh boy. I think the pre-market lows be defended here as we speak right now. So I would love to get down in the 43.10. If it get down to the 43.10 area again, I think you take a poke on the long side, lead on the pre-market low. You take out the pre-market high. There's nothing up there to unchanged, and man, you get back up to 41.50. That's unchanged on the session. That's gonna be a really a big victory for the market. So that's what I'm looking for. Let's hold up that pre-market low, and let's see if we could test unchanged here. I just want to compliment Mitch and Dennis here on just a fantastic show today. With everything that's going on, and putting it, it's hard to talk about the markets and put
It
things in a
is.
proper perspective if, if you're a little bit emotional about something. But you guys just did an incredible job, and I
You
just want
too,
to
Joel. I
thank
mean,
you.
obviously this
Yeah.
strikes home for you as well here. So, it's a touch. It's a hard thing to see. Nobody wants war. We don't want us going back to war. I mean, with Biden comments talking here, which may be moving the market as well,
There
as
we go.
we stand behind Israel, and that may be why we got the little pop that we did. We just popped 8 S&P points here. But I mean, nobody wants to see stuff like this happen. And again, I'll just say what I started with the show is sometimes it's not about making money. Sometimes we're giving your thoughts and prayers to those who are affected by this, and you just hope for somehow a peaceful outcome.
Yeah, definitely. Like always, guys, keep up with everything on Benzinga. We will try to keep you guys up to date with all the breaking news, of course, as it should go out through the day. We'll let you guys know what hits the tape. Who will we have on tomorrow, Joel?
Oh,
Dun, dun,
Mitch.
dun.
Dun, dun, dun. Oh boy, you caught me sleeping
All right, well, I'll
here.
tell you
No,
guys.
no, no, no.
Uh-oh.
No, you caught me sleeping. You gotta
You
yell at
see,
me,
you see,
Mitch. I yell at
sometimes
you all the time. Go with
sleep.
Ivan Feinseth is going to be joining us from
Hmm.
Tigers Financial Powers, and I'm going to make a prediction right now. Ivan's going to be bullish.
All right, bullish big tech, right? My man likes his big tech. We definitely know
He
that. We'll
does.
take a look at it.
He doesn't.
All right,
Yeah.
everyone, be safe out there.
Diamond
Be
hands,
safe out there,
Ivan.
guys. We'll bring you
See ya.
guys over to live trading. That's coming up next. Dennis Dick is out of here. Joel Elconin's out of here. Stay tuned, guys. Of course, we got the future of digital assets going on in November. Don't want you guys to miss that. Check it out. I'll throw out the link here in the chat. The future of digital assets. You don't want to miss out this event. There's going to be some great speakers. Of course, we'll have Kevin O'Leary back in the show, and he'll actually be in town. Check that out, guys. The future of digital assets. I'll throw up the link here and get you guys over to live trading. That's coming up next. Don't go anywhere.